Hello everyone, this is Jean, a researcher at DXpert, and today we'll be talking about ETFs. As the financial system is dynamically changing, ETFs have emerged as one of the more popular investment choices among investors. Plus, ETFs provides an excellent diversification. So now let's take a look. Before we get into it, we'll be analyzing Asia ETFs, particularly China, Japan, Taiwan, as well as Korea. After that, we'll be having an overview of the overall Asia ETF's outlook for 2024. Asian markets saw a volatile year in 2023, with inflation, rising interest rates, and China's sputtering recovery dragging down growth last year. Japan's Nikkei 225 was the best performing index for 2023, with a percentage gain of 30.13%. This is mainly due to its improving corporate results, which supported Japanese stocks, as well as growing optimism that the Bank of Japan may finally end its ultra-easy monetary policy after decades of near-zero interest rates. Same goes to Taiwan's TAIEX with a percentage gain of 26.83%. Meanwhile, Hong Kong's Hang Seng Index was the worst performing, with a percentage loss of 15.38%. This is mainly due to Hang Seng Index including shares of Chinese companies which became less popular among foreign investors. Speaking of China, the CSI 300 was the third worst performing stock market in Asia, losing 11.75% last year. This was due to its underwhelming economic recovery caused by a property downturn and local government debt issues. Regardless, the outlook for Asia is still bright. And this view can be supported by IMF, which expects a growth rate of 4.2% in 2024 for Asia, compared to a global growth forecast of 2.9% in 2024. In particular, China, the biggest economy in Asia, cannot be overlooked. While the country requires time to stabilize again, it should provide attractive potential for selective equity investors in 2024, as we can see from China's underwhelming post-COVID recovery to the strength of the US economy, the promise of its AI industry, and a no-show global recession. Speaking of which, let's first start off with China. Firstly, China has a strong fiscal policy. For example, in Q1 of 2023, Chinese cloud computing and AI ETFs rose 50% and 40% respectively, and saw a 45% correction in Q3 as the state intervenes and calls support in those sectors. Another area of growth is enhanced index funds, which in China is called quasi-active funds, of which 20% can be actively run. Therefore, if you are a Chinese equity investor, you should focus on China's thematic ETFs that concentrate on particular industries, trends, themes like technology, sustainability, or developing markets. For Japan, Bank of Japan may reduce ETF purchases as UEDA wants to grow the Japanese ETF market organically. With 3 central bank ETFs purchases in 2023 in aim for boosting demand for locally listed ETFs. On top of that, with Nikkei 225 being the top performer index in 2023 and total inflows of $45 billion, it gives a positive outlook to Japanese ETFs. Flows are expected to continue to flow in if the Japanese yen keeps trading at around 150 to the dollar. For Taiwan, keywords like dividends, income, and yield have been used most for 2023 so far. Traditionally, ETFs uses an earnings equalization mechanism to shore up dividends. However, this may not persist in 2024 due to dividend arbitrages issues as well as misconduct by ETF issuers. Therefore, ETFs regulators have drafted out an initial framework to change the wording around dividend payout to dividend accounting in 2024. Moving on to Korea, South Korean leveraged and inversed ETFs makes up 24% of the total number of ETFs in South Korea. are actually not performing as well as ETFs with lower volatility, as flows are going into products with volatility of less than 10%. This trend is expected to continue as ETFs have a higher adoption among retail investors. Moreover, the top 6 ETFs by inflows are fixed income products. So even though leveraged and inverse ETFs are often in the headlines, low volatility products like fixed income funds gather more flows. Overall, investors have been bullish on Asia in 2024, but there are still some things that we should look out for. First of all, of course, rate cuts will be the center of investors. Central banks in Asia, as well as all around the world, tend to follow the Fed's lead. The only exception is Japan, where investors are anticipating when the Bank of Japan will finally raise its interest rates. Moving on, we have mentioned before that 2024 will be a year of normalization for most economies, right? So this will benefit growth sectors like infrastructure, real estate, energy, commodities, as well as AI industries. In particular, the real investment trusts and tech in Asia. And lastly, geopolitical developments must be closely watched, especially the US election, which is coming very soon. It will be a critical point for US and China's relations, which can cause heightened uncertainty and anxiety, impacting the global economy landscape. So that will be the end of today's sharing. If you're going to invest in Asia ETFs, I hope this sharing can benefit you. Happy trading and see you guys in the next one.